Good afternoon. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Tuesday, and we're at the 28th of April, 2020, and we're just getting on to 3 p.m. Central Time. Be interesting to see how the markets finish up here. You're about unchanged in the Dow, 150 lower in NASDAQ, down 11 in the S&P. And as we step over and look at the grain market, it's another day where corn is lower, wheat was up not much, as you can see, and beans still eking itself lower. Cotton had an attempt at a rally, still stayed up 77 points today, but as you'll see in that chart, it still looks to me like it wants to head back a little bit to the downside. Cocoa market up, energy market a very mixed bag. Brent continues to gain on the U.S. crude as the USO fund continues to sell their June contracts. They said they would do it for the first 4 days of the week. They're doing it, and replacing their long positions, I guess, elsewhere in the different months that go further out to 2021. All right. As you can see in the soybean market for the week, we're down about 6 cents. It's early. We're only on Tuesday. The market working its way down. Ideal planting positions we're seeing in many parts of the country. Those farmers, you can count on it. We saw the numbers yesterday. They're way ahead of where they have to be. So they're really racing with the tractors, getting everything in the ground that they can. And soybeans have a ways to go. They don't all get planted at this time of the year. Depends where in the south you are and what's going on. But as you can see on this chart, still working itself lower. And in terms of the swing line, it's back to bearish. Now, why back? Well, you've got the lower highs, lower low pattern again. So you had this big up here, a down. You came up, played around, and now you've reestablished a downtrend until 846 and a quarter is taken out. Now, if that's taken out, it's a first indication the market is making what we'll call the planting low. How's that for a word? In looking at where the moving averages are, you're under the 18-day, which is under the 100, so the setup is basically bearish in this. When you're looking at where the market support might come in, it's right under you. That 828 zone on the lower Bollinger Band is a number I'd pay close attention to. Markets that tend to hit Bollinger Bands after they've been away from them for a while often find support at that number. That is not a buy signal. That might be, in fact, it is a signal that if one were short, maybe that's a good spot to lift some of the shorts off. And as you can see in terms of the momentum of the market is oversold. We have an oversold market that's coming in again. It did it back here, hit the Bollinger Band. Now it's coming to hit it again. I would expect to see some short covering in the market. The meal market today down slightly, still hasn't hit a Bollinger Band low if we all step back here until you go back into February of this year. The market coming down, I would expect because it's oversold that if it gets down there, that's where the shorts will lift positions. If you get over 294.70, it's also a number that would probably end this phase of the downtrend and we go into more of a choppy market. As a chartist, that's what I see. The soybean oil is getting a bid as the crush spread is favoring the oil over the meal. That's the only thing I can say to make sense. The market did get down to the Bollinger Band, just like I'm telling you on the soybeans and the meal. I would expect some support there, not a change of trend. This market is terribly oversold as well. So we have none of these markets trying to convert from oversold to locking in by embedding, locking in the slow stochastics when both numbers would go sideways under 20. We're not getting to that point yet. In the corn market, first thing my eye goes to, oversold. Second thing, second test of the lower Bollinger Band. The market finished right on it today at 312. That is the Bollinger Band low. Trend down, market starting to give up, not a lot of momentum to the downside. So you had this break and all of a sudden things are slowing down. That is not necessarily bullish, friends. The market's got to make a decision. Does it want to embark on another leg to the downside, or is this enough on this leg to get a small bounce? That's what I think the market's looking at. Wheat remains in the bear camp. It hit the Bollinger Band. It should move to the right-hand side. The fact that it's not moving far away from it is bothersome. That might mean it wants to lock in against it. If it does, that can carry this market maybe to that 510 zone very quickly. You're oversold in the market, not embedded, so I don't see anything fresh here. And you'd have to work out of that condition before I would tell you that I think the bears would be waiting to sell this market at 542 and a quarter up to 546 and a quarter. Bears, I don't think, like to sell into oversold markets. In the sugar, it's just a never-ending market that fights against the Bollinger Band. Today we got a bounce in the market. It closed just under it at 952. 54 is that number. So that gives us 2 days in a row where we're under that number. I don't know if it was under it at that third day. Right here, it settled 981. Yeah, that was 3 days in a row. So we have 3 days in a row under the Bollinger Band. That gives the market a chance of about 2% of staying under it tomorrow. So I'm looking for the market to move to the right-hand side. But that does not mean you're bullish. That's all that means. Now, my eyes go here. Are we embedding? We have both numbers under 20 today. Both were under 20 yesterday, not the day before. Markets that have been oversold and then decide to embed, you don't get it that often. So I am looking for a bounce in the market. I don't think it amounts to very much. The trend is down, but I don't like oversold condition. If it embeds, I'd still wait for rallies in the market for new ideas on the short side. I don't see anything on the long side as a chartist. In the coffee market, you're now embedded. So you've got your 3 sessions. This is what I'm talking about wheat. This market started this way, and it just hung in there. And I said, watch out. This market might decide to go for these lows back here. I don't appear to be too off the money on that right now. Chart is breaking down, as I like to say. Then we get to the cattle market, which got a delayed reaction, but finally got over 85.25. Now, what I think is behind this in part, the president is threatening to use basically the War Act, the Protection for America, of telling the packers to bring back their workers. So if he can give them liability protection, if he orders that to be done, a certain amount of workers will show up, and we might get demand coming in for the meats again. So that is not bearish, these meats. That could be friendly, the meat market, as there'd be more fresh meat being taken. In the hog market, you got up to the Bollinger Band, and what would I tell you? You've been with me a long time, I'm hoping. The first challenge of a Bollinger Band is where professionals often take money off the table. That's what I see over and over on the chart. Go back and look at it. You will see it yourself time and time again. What's the difference between a professional and maybe you? You might be a pro if you've been listening because you're learning these techniques. So that's all that I see. That doesn't mean it's a trend reversal. That was a logical number where the market says, 95% of the time the market stays within the bands. It's worked all the way from 42.55 to get up to the 56.70 level. First challenge, time to come out. That's how pros think. You don't need every penny on the board. You don't need anywhere near it. You need to take something out of the middle, and that's what that's all about. But we talk about this in our newsletters at Linn Associates. We write letters on all the agriculture sectors. We not only cover futures, we cover the spreads, we cover hedging, we cover what we think the industry is doing, in other words, the packing houses, where they're at. We talk about option strategies. We talk all different ideas there. And we do a lot of it in writing, and a lot of it's oral through our charting platforms, because during the day we're broadcasting all day on all these subjects. So if you're interested and like to see what we give to our traders, and I'm talking people that trade through us and so on, all you need to do is either call us. We'll set you up right away for a free trial. You can go to our website under free offers, give that a try, or you can click up here if you're watching me on YouTube. That'll take you right to the page, and away you go. With that, I'm Ira Epstein. You have a great trading day, and I will see you all tomorrow.